Hi, my name's Mark Chapman, manager of the HI Principia European Equity Fund. Looking at the recent trends in the market, we see that at the end of 2018, the market became very oversold based on liquidity being withdrawn, particularly from small and mid-cap stocks in Europe. And this meant that there was extreme strain in terms of the strategy at that time, because the fundamentals were being overridden by the fact that stocks with market caps below 1 billion euros were falling twice as fast as large cap names. That was the situation in December, and we considered that the position had become oversold and technically weak. Looking into the start of the year, a rebound was likely, and so we had the fund positioned slightly more net long. In particular, companies which had suffered during the past few months, where we thought the fundamentals would remain firm, have rebounded reasonably well over that period. So I would highlight Oerlikon in Switzerland as one such name. It's a good quality industrial company with expertise in surface solutions. It treats the quality of aeronautics and automotive component parts to make them more durable. A world leader in the area with good organic growth and a very strong balance sheet. Given the weakness in valuations, the strength of their balance sheet should enable them to make accretive acquisitions, which could add 20% to earnings on a midterm view. SimCorp is another good example of a long company. This is a software business focused on asset management. Initially, this seems to be a concern, but clear cost focus from the asset management industry is helping drive demand for SimCorp's core business. Organic growth seems to be improving, and we think that their market position is also accelerating in a generally weaker environment. On the negative side, the losses in January came from the short side, in particular industrial and healthcare names. Overall, we reviewed these names and we've cut the positions where we think expectations are low. However, overall, in terms of a risk-return perspective, we think following the rally in January, the risk-return is skewed to the downside now. And that's essentially because economic growth appears to be weakening throughout the developed world. Also, the low bond yields reflect a concern about US growth at the end of 2019 going to 20. And more particular, in terms of earnings expectations, we think there's still potential for downward revisions going through this year. So in terms of overall portfolio construction, the largest overweight is in healthcare, and we're short names in the automotive and industrial space where we think they could suffer from their end markets starting to weaken. Thank you very much.